The International Monetary Fund or IMF has kept its growth forecast for India unchanged at 7% for financial year 2025 and 6.5% for the next financial year 2026 in its October 2024 World Economic Outlook report. This stability indicates the confidence of the IMF in India's robust economic recovery, but recognizes that the pent-up demand seen after the pandemic has largely tapered off. India's GDP growth has decelerated from 8.2% in financial year 2024 to 7% in financial year 2025 and further to 6.5% in 2026. The moderation reflects the economy's return to its potential growth trajectory as the post-pandemic demand surge normalizes. However, the IMF maintains that India's growth remains strong, though not at the exceptional rates observed during the initial part of the recovery. This trend aligns with the Reserve Bank of India, which recently projected growth of 7.2% for the current financial year, driven by strong domestic consumption and investment momentum. One of the key factors accompanying economic growth is increased job creation and improved social security measures. In India, rapid GDP expansion has spurred higher demand for labor across sectors. From the years of 2017-18 to 2021-22, the country generated over 8 crore or 80 million jobs, averaging more than 2 crore or 20 million jobs annually, despite the global disruptions caused by the COVID-19 pandemic. This demonstrates the effectiveness of several government initiatives aimed at enhancing employment, supporting India's social and economic fabric. Globally, the IMF's growth outlook remains relatively stable but modest, with global GDP expected to grow by 3.2% in 2024 and 25. This forecast has remained mostly unchanged since July 2024, with slight revisions driven by sectoral and regional shifts. The pandemic's lingering impact is still evident, particularly in the prices of goods, which remain elevated compared to the prices of services. This reflects a broader shift from goods consumption to services consumption as economies worldwide recalibrate. Emerging markets like India and China have benefited from this shift, with manufacturing increasingly shifting towards these regions. However, advanced economies have experienced eroding competitiveness in the manufacturing sector. The IMF revised China's 2024 growth projection slightly downward to 4.8%, citing concerns over its property market, which could have significant global ripple effects if further contraction occurs. On inflation, the IMF projects global inflation to decline gradually from 6.7% in 2023 to 5.8% in 2024 and 4.3% in 2025. Although the prices of goods have stabilized, the services price inflation remains high, particularly in advanced economies. In India, headline inflation is forecast to be 4.4% in financial year 2025 and 4.1% in financial year 2026, signaling a controlled yet persistent inflationary environment. Overall, India's economic trajectory remains strong, supported by domestic drivers, but challenges like global inflation, commodity price volatility, and geopolitical risks could shape its future course.